I'll say it before I get targeted in the comment section. My video, especially the title, my video was actually pretty good. Talking about the uncertainty of this trade deal that hasn't actually been signed yet. That is all true, right? There is a temporary 90-day pause. I'm glad that I uploaded that video, but the title was like, hey, I see this to be a bull trap. Markets did not consistently sell off. They did end up recovering. So I want to make sure that, again, I was wrong in that sense. Markets, I don't want to call this a V-shaped recovery, but from when I uploaded that video and the way that the markets were looking, markets were overbought. They were consolidating, showing signs of resistance, and then downside progress was being made. Everything looked like it was retracing, and it made sense because from what was announced originally to what was actually now understood is that, okay, well, this trade deal isn't actually signed. And tomorrow we have the CPI data report. We'll talk about that in just a little bit. Markets ended up recovering, not just recovering, but actually ended up making new highs. Although they are giving it back during the extended hours, I'm all for, again, I'm never afraid to admit like, oh, I need to be right every single time. No, definitely not, especially when I upload 2 videos every single day. Intraday, market directions are always changing. I gave my opinion. I gave my reason why. I still stand by that. Obviously, markets are recovering based off of hope that a trade deal actually does get signed. It is showing signs of progress of both countries meeting together in Switzerland, and that's why the markets originally recovered. But I just didn't understand the whole reason the markets were celebrating. Like, we saw a huge gap up over what, right? There was a temporary pause, yes, but nothing has actually been signed. And the way that Trump spoke in his speech, I thought there was a lot of uncertainty there. But again, that's 100% just my opinion. Nonetheless, what do we have tomorrow? Tomorrow, May 13th, is the CPI data report, and I'll let you guys decide. Again, I don't have to, but 1 hour before the market opens, which means that for me, it's going to be very, very early. There's going to be an inflation report. According to this inflation report, the market is going to react if it comes in lower or higher than what is expected. Core CPI is expected to be at 2.8%, and overall CPI is expected to be at 2.4%. No change. This is the part that I quickly want to explain, but before I even get into that, I wanted to ask you, if you want me to go live for tomorrow's CPI data report, all I ask you to do is smash that like button and get this video to over 1,000 likes, and make sure that you turn on your post notifications for my YouTube channel. As long as I get over 1,000 people that like it, I just want to make sure enough people show up. If that's the case, I'll go live 1 hour before the market opens. Now, this is the part that confuses some people that might be a little bit newer to the market. How is it that we're expecting the inflation to increase 0.3%, but we expect to go from 2.4 to 2.4? Very simple. So first off, even if I don't go live, I want you to understand where you can access the CPI report. It's under the bls.gov/CPI, and the PPI report is also released here. This is the Consumer Price Index report. It's a monthly report that tracks if inflation is going up or down based off of consumer goods. This is my main concern for tariffs. Tariffs are now being ignored because supposedly they're not important anymore and markets are recovering. And we all know that the stock market's a leading indicator of our economy, right? Well, what happens when tariffs begin to get tracked in our inflation report? Because that takes time. That's not just like, oh, tariffs get implemented next month, we see it reflect on our inflation report. No. It takes time to get passed down to the producer, and then from the producer to the consumer, and then the consumer finally tracks it after a full month, and then we get to report it. This is it. So if you click on PDF, it's going to prompt this little thing up. This is the one that was released last month, April 10th, 2025, and this was for the month of March. So what happens is they add the new month and then they remove the old one. So what we're going to be adding tomorrow is the month of April. So you can see last month we added the month of March. We're going to be adding the month of April and then removing the old month of April. So again, going back to that same question, how is it that we're adding 0.3%, but we're expecting no change? Very simple. When you look at the CPI report, we're removing 0.3 from the formula of what is the sum of the last 12 months. So we're removing 0.3, and then adding the new expectation of 0.3. So that is how they're coming up with the sum of therefore being no change. If you add 0.3 on the new month of April for 2025, but you remove the old month of April of 2024 of 0.3, then again, it's a wash. There's an exact formula on how the CPI report is actually calculated. It's not just the sum of the last 12 months, but that's just a broad way for me to be able to explain it. I just wanted you to understand the why. If we see an increase of 0.4% of an increase, then expect a rise in inflation higher than what is expected. If we only see a 0.2 or a 0.1 or maybe even a drop like last month, then guess what? Then we can possibly get closer to that 2% target that the Federal Reserve has been working towards. So again, that's for overall inflation, 2.4%. Then there's core inflation. Core inflation is all items less food and energy. I could explain this in more detail in tomorrow's live session if we end up actually going live. But that's the CPI report, which is again the Federal Reserve's main focus because this is the item supposedly that they can control. And right now we're sitting at 2.8%. So 2.8%, 2.4% is overall CPI. And the expectation is again very simple. No change on core CPI, no change on overall CPI. That is the expectation, the forecast for tomorrow. And surprise, surprise, guess what? Well, like I said in today's earlier video, right? Markets like to de-risk before an inflation report gets released, especially when markets have been pumping up all based off of hope. You guys have to admit that that is true. There's nothing fundamentally that has improved in our economy with the most recent GDP report showing that our economy is contracting to, this trade war still going on and the uncertainty between China and the US as nothing has actually been signed. Yet markets have made nearly, not a full recovery, but a very impressive recovery from lows of 398 to now highs of 508. So again, if markets over-recovered and overreacted, then guess what? Then they retrace a little bit in correction of their overreaction. This shouldn't scare you. This is not a video like, oh my God, you need to sell all of your investments. No, right? I mean, just like anything, when it overreacts either on the downside or on the upside, it tries to find a middle ground and it corrects and it de-risks. That's what I expect tomorrow. What most likely happen leading up to that inflation report. Do I really think that the market is going to care about tomorrow's inflation report? No. I think Trump has been playing these important economic reports very well, where he tries to go live or he tries to post a tweet to mitigate the damage and impact of these reports. It's a form of, I don't want to call it manipulation, it's a form of a distraction I've never seen before. Where again, if you're trading off of technicals or you're trading off of fundamentals, it almost doesn't matter anymore because you got to look out for a tweet from Trump. And it's an odd way, at least in the short term, to be kind of like influencing the market. But nonetheless, we all know big picture that what's coming is coming, right? We can see treasury bonds rising. The U.S. still needs to refinance its debt. So he can try to tweet everything he wants to create short-term hope. But at the end of the day, as long as things are not actually getting better, right? What do we really expect? You're only prolonging the delay of a potential correction, right? Because we all know that the U.S. does have to refinance its debt, but the Federal Reserve isn't budging with cutting interest rates. And that was originally pissing Trump off to the point where he was threatening Jerome Powell. Now they're working on a negotiation with China, but nothing has officially been signed yet. So again, there's a lot of hope in the market, but still not enough results to show that the market is actually, not the stock market, but our economy is actually growing. It's still contracting and there's still a lot of uncertainty. And I think we'll clearly be able to see that in the reports that follow. It's just hard to really pay attention to these reports when they're being overlooked because of these tweets. So just my 2 cents. Very excited to follow up. And again, let me know down in the comments section if you would like me to go live for tomorrow's CPI report. So again, get us over to that 1,000 likes. I hope to see you for tomorrow's CPI. And also, do not forget, if you ever want to tune on into my live trading sessions with our LPP team, that's the second link in the description down below if you want to check it out. Like always, let's make sure that we end the year on a green note. Take care, team.